Good afternoon, everybody. Happy Friday. It is once again time for the Zaner Metals Week in Review. With me always from Chicago is Peter Thomas.
Hello, everybody. It's great to be back, and boy, what an exciting week! And it's rare when we can hit it out of the park the way we did with our projections from last week, but we sure
Yeah, not
steered our
bad.
people right. Yeah,
Yeah.
absolutely.
Yeah, so let's jump right in.
Sure.
If you recall, on Monday, the gold market gapped higher, so gapped higher on Globex and traded to a new multi-year high, 1611 and change. I think was the high on Monday.
Right.
And then no, I'm sorry, it was 1588 or so. So we're back testing that Monday's high.
Okay. All right.
1611 was the high from several weeks ago after the
That's
the
why I
shootout,
rang a bell with me. I got you.
shootout with the Iranians.
Yeah.
But we kind of faded into midweek and then rallied back into the weekend here. So what do you think's going on with gold?
Well, I think initially what we saw, Pete, was we saw a lot of just outright liquidation in everything. Plus the fact that anticipation of a short-term lack of usage and lack of orders coming out of China, which is over 62% of multiple metals, put a lot of pressure on industrial metals, rhodium, platinum, palladium. Platinum had its first down week since, I believe, December 16th.
Yeah, mid-December.
Yeah, so that's what it was. It was selling pressure off of anticipated usage.
Yeah, so I kind of see it as two different scenarios, kind of working side by side here. We have the deflationary angle that you mentioned, and then we have the safe haven angle.
Right.
Gold has primarily stuck with the safe haven status. Silver was an interesting story this week.
Oh.
I
mean, only swung $1 in 2 days. I mean,
right, a dollar range.
Yeah.
In 2 days. So
yeah.
It has swung, I think, between those two influences, the safe haven influence. So it was up initially early in the week, then got hammered midweek, dropped 3% one day, only to come charging right back. So again, do you kind of see it as it strikes me that the deflationary angle is probably the more impactful in silver.
Well, the problem with silver is that it's a yin-yang product.
Right.
It not only is it an investment grade product, you can buy and hold silver for inflationary times and things like that, but also it is and has tremendous industrial usage. So you have the yin and the yang here, where we have people anticipating a sell-off in the construction and manufacturing of computer keyboards, phones, things of that nature, of which silver solder is a tremendous component of. And on the other side, you have people going, well, if they broke it down, it is a precious metal, maybe I'll buy it. So that's what I think is going on. It's a very almost schizophrenic trade. You know, 1 minute you're buying because you're looking for it to be used in computers, the next minute you're looking for inflation. So I see where there could be a lot of confusion on why that particular market is been on both sides, but for almost no apparent reason.
Yeah, right.
Uh-huh.
Yeah, so I think we can probably anticipate short-term volatility in the week ahead, particularly
Absolutely.
in silver. And I think Monday is going to be a really important trading day, not just for the metals, but probably for all markets. The stock market is is getting hit pretty hard again, and commodities in general. So obviously the big mover, Dr. Copper. What happened in copper this week?
Well, we've had 13 days straight down in copper. I mean, straight down.
Yeah, they totally pulled the rug out.
Oh, yeah. And, the question is, are we going to hold 250?
Yeah.
And, here's the thing. They do not have circuit breakers in Asia like we do here. In 2015, they quit using circuit breakers and they use 10% gaps. So if the market breaks 10%, they'll stop it. So the question becomes, if it opens, takes out 250, which has traditionally been its strong support area, and goes through that and starts hitting stops, where will we go? That's the question. And if we take out 250 and it starts looking at 240, how attractive is it? I'll tell you what, I think we should start talking to some of our hedgers, our miners, our net users, our copper users, our recyclers, and tell them, hey, let's start looking at some long-term entry points here, because I think we're getting close to an interim bottom.
Right, right. I remember when we were at those lows several months ago.
Right.
You were a big advocate of buying strategies down there, and worked out great.
Yeah.
And so again, I don't know how much additional downside potential. The wild card obviously here is the coronavirus, and if it continues to spread over the weekend. And again, no positive indication with regards to containment.
Right.
I think we could perhaps set new lows, take out last year's low, but again, I think the downside beyond that is probably pretty limited. And in particular, it's very oversold as well as a result of, as you mentioned, nearly 2 weeks now of straight down.
Exactly right. And maybe in some situations not sold. Let's be very specific and say liquidated. And there's a big difference between being short and being out of the market. Both, in my opinion, are positions. A lot of people have just got out because they were confused by what's going on. And I'll tell you something else that's interesting. I've been watching production numbers, and we're seeing a lot of mines slowing down in anticipation of less consumption, which eventually puts a very big bump in the road, because you end up with a interim gap in deliverable product. So, this could get very interesting. Give us another week of this chopping around off of this, and it's going to get real exciting. You think a dollar mover in silver is something?
Right.
You watch. We'll see 8, 9, 10 cent swings in copper intraday. It would not surprise me.
Yeah. So I guess the message certainly to our hedge clients are: make sure you got your hedges on.
Yep. Make sure you got your hedges on. For our COOs, general planners, for construction, durable goods, also for people who are in auto manufacturing right now, it's time for us to sit down and do some buying schematics going out to 2022. I think that we're going to have some tremendous opportunities, like you were saying. Months ago when I was on Bloomberg and begging people to buy copper at 240, and then they watched it go to 285 and they wonder what happened. It's going to be one of those scenarios where the opportunity is going to present itself probably next week. Let's get ready for it.
Right. So you mentioned palladium experiencing its first down week in more than a month. Platinum was off this week as well. Yep. The one shining star, rhodium.
Rhodium again.
Set a new all-time high today. It was $10,250 Johnson Matthey reference price.
Okay.
So that's $150 higher than the previous high, which was set in June 2008.
Production.
Why do you think? I heard or read a great quote. A trader in London said that rhodium is trading to illiquidity.
That's not bad.
I thought it was a great quote.
Yeah, I can see that. I mean,
they didn't name the guy, so I can't give them props.
That's all right. It's ours now, baby.
Pete said
rhodium, said that, yeah.
Rhodium trades to illiquidity, and I think that's the reality. In talking to some of our dealer friends, who are dealing with these wide spreads and so forth, they know that people are selling rhodium, but they're not getting anywhere close to 10,250.
No, they're not. You're right.
These bars are being sold to the refiners. They're being re-refined into sponge, the powder form used
or extruded wire for use in the creation of high production jet parts, or they're going into catalytic converters.
Right. And so the refiners continue to be way behind, 6 months plus behind. And there's no real effective way to hedge
Nope.
rhodium. You could hedge in palladium, I suppose, but it doesn't trade necessarily, exactly one for one by any stretch.
Well,
So
the largest producer, the largest miner of rhodium in Russia today came out and said we're 6% under last year to date.
yeah, and Nornickel, if that's who you're
That
referring
is
to.
exactly who I'm
Yeah,
referring to.
so Nornickel this week also said that they were going to dedicate production to bars rather than
Powder.
powder in
Right.
palladium,
Yeah.
as a way to kind of satiate the speculative demand for palladium in bar form. But in my mind, you're robbing Peter to pay Paul.
Yeah. We're taking it from this pile and putting it in this pile.
Right. And so
we're still, yeah. I mean, so we're, instead of blasting it, we're smelting it. It's just, I just don't get it.
Yeah.
Yeah.
Well, the bar buyers, I don't think that they're necessarily going to see any kind of better premiums or anything.
No.
But there might be greater availability, but at the expense of industrial users, and the demand there remains robust, and it seems to be, largely ignoring the coronavirus crisis.
Well, when we used to supply, we have an NDA in place. We used to supply one of the auto manufacturers with 50-ounce bars, and we would smelt them out. We'd just deliver them to them for production reasons. They were generally, I think you hit it right on the head, about 6 months out. So the question becomes: are we going to find more product over the next 6 months? And the answer is no.
Right.
It's just that simple. Yeah,
6 months is a long time to be naked, long, physical, as you wait.
It is,
particularly in rhodium. And so that was kind of the point. I'm circling back around.
Yeah.
Is that the spreads are so wide because they're basically sitting on this rhodium for 6 months as it makes its way to the refining process. And in many cases, they're not even paying the providers.
But what do you do to mitigate the risk? There is nothing, and
right.
unless you have a net hedging vehicle, such as a commitment from an end user, you're out of luck.
Yeah.
So we have probably the largest rhodium trader user in the world today, trading with us here on our Tornado platform, and there's nowhere that he can go. I mean, there used to be a small firm in us that would trade rhodium as a hedge in South Africa, and they went broke. Yeah. So right now there's no exchange. We've been working on creating a vehicle for almost a year, and we're still not there.
Right.
Yeah.
Exciting stuff. And I think next week is going to be very exciting as well. So as always, thank you for your input.
You bet.
If you like our videos, make sure you please subscribe and give us a like as well. And until next week, I'm Peter Grant from the Denver office.
And this is Pete Thomas in Chicago, saying good night. And come on back and be sure to look for us on Friday and start signing up for us on Facebook as well.
Thanks. Have a great weekend.